Ladies and gentlemen, Keiki here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.5%. There, on the S&P Nasdaq 2.1%. Semiconductor same. Dow 1, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, retail, emerging market. Every single sectors are red today, excluding the fact that utilities is the only sector with the green number. Bitcoin, Dow, gold, silver miners are flat. Dollar flat. Oil down. Treasury bond up. VIX popped about 7%. There, let's stick with this ETF. Spider! 65-minute chart here. So this is what we closed yesterday. And looks like we see that continuation on that first hour. We talked about the fact that micro-term moving average is now supporting the sellers. And so on that first hour, pretty much tanked right away. We broke right through my short-term moving average here. And ever since then, this market kept deteriorating entire day. And it blew through a prior support right here, as you can see at 394. That was the level coinciding with my midterm moving average, which is my purple dotted line there. However, it looks like it did find that longer term moving average right here. I'm going to zoom out later and you'll see why both of these moving averages are very, very important moving averages to keep an eye on this week. So on that fifth hour, we did find a little bit of support on that long-term moving average, and this is the only green candle we're seeing on the line. You see that long-term moving average right there, right? That was a September swing high, which we've been talking about. You see how most of the down gap is filled, but not all of it. And we talked about the fact that if buyers cannot fill the entirety of the down gap from September, things could get very hectic. And indeed, been very, very hectic for the entire week this week and a couple days last week. And you can see that midterm and the long-term moving average is coming down right here. You can see that. And you see how that midterm acting as a resistance, the long-term acting as a resistance, midterm acting as a resistance. And then something happened right here about mid-October. That midterm started acting as support, supporting the bulls now. And that'll happen mid-October. And then you can see price broke above my long-term moving average in late October. Ever since then, market did make that initial pop and then came right back down. This is where my midterm and the long-term start working together to support the bulls here. Again, early November and mid-November right here. And this is the first time since they met, the price and the midterm and the long-term moving out, they met in November. And this is the first time since then the price came back to this level, retesting this level. This is a level where we want to keep an eye on because we don't know for sure. Nobody does if this level, if that long-term moving average is going to act as support as of today. All we can say, all we can see, it did act as support, a month ago, very strong support at that. And it was strong. It's a strong pivot, meaning it acted as a resistance in the prior, and then it acted as support. So you can see this is important. These are important moving average, both of the midterm, both the midterm moving average and the long-term moving average to keep an eye on going into this week. Because if we do find support in this vicinity, it could be a crucial piece of information that could help us to guide for the remainder of the month of December. Here, let's check out that oscillator. So that oscillator, we do see that oscillator showing us that cross right here, that initial cross. That's a very early stage, obviously. I mean, we are seeing the cross, as you can see right here. Not some of these little moves. We are seeing the cross, but just the cross alone isn't gonna be enough, especially in this market. You do need to see a follow through to the upside. That means if the buyers want to utilize this oversold condition that we're dealing with, as you can see here, last time we saw that extreme oversold was in that vicinity, and that was that level. And then we got close to that level right here, right? And that's here. And then now we're back at this level, and this is here, right? So we do need to see a follow-through move to the upside, at least day or two, to kind of solidify that oscillation, to make that move to the upside, and that moving averages to really, find that support with the price and bring the price back up. Sentiment is bearish, but the short to micro term bears are tired, and how the buyers react going into next couple days is gonna be the key for the month of December. We'll come back for you. We'll read, assess the situation. Enjoy your evening. Good luck trading tomorrow.